America is producing millionaires at a record pace. New data shows the high net worth population has grown by double digits since 2025, and it's not happening by accident. Tax reform, regulatory rollback, and a pro-growth policy environment have combined to create one of the most fertile periods for wealth creation in modern American history. But here's the real question. Is this a story about the rich getting richer, or is it a story about what happens when you remove the barriers that held entrepreneurs, investors, and small business owners back? Today, we dig into the data, the policy, and the broader economic picture. Because understanding how wealth is created is the first step to understanding how more people can access it. Let's break it down. It starts with the Tax Cuts and Jobs Act, one of the most consequential pieces of economic legislation in a generation. Passed in 2017 and extended and refined in Trump's second term, the law lowered corporate rates, simplified individual brackets, and sent a clear signal to investors: America is open for business. The results are showing up in the data. High net worth households have grown by double-digit percentages since 2025. Economic analysts point to one under-discussed factor driving this: policy certainty. When business owners and investors know the rules won't shift overnight, they plan longer, invest bigger, and take smarter risks. That's not a talking point. It's how capital formation actually works, and right now, it's working. Tax policy opened the door. Deregulation pushed it wide open. By cutting bureaucratic red tape and streamlining approval processes, the Trump administration created a launch pad for startups, scale-ups, and established businesses looking to expand. The S&P 500 has shown resilience after early tariff-related volatility. Venture capital activity remains robust, and the wealth creation isn't concentrated in one corner of the economy. Technology, energy, and healthcare have all seen significant gains. Here's what critics often miss. When entrepreneurs build wealth, they don't hoard it in a vault. They hire people, they fund innovation, they generate tax revenue. A rising tide of entrepreneurship is one of the most powerful engines of broad-based prosperity this country has ever known. Let's address the elephant in the room. Does millionaire growth mean everyone benefits? The data offers a more nuanced answer than either side usually admits. Yes, high net worth individuals are up, but so is something else. 172,000 private sector jobs added in the latest reporting period. Unemployment at 4.3%, wage growth holding steady, and perhaps most importantly, increased access to retirement accounts, stock ownership, and small business formation among middle-income households. This isn't a winner-take-all story. It's a growing economy creating opportunities at multiple levels simultaneously. The debate about pace and distribution is a legitimate one, but it shouldn't obscure the fundamental truth. More people are participating in wealth creation today than they were 3 years ago. Building wealth is one thing, sustaining it is another. The Trump administration's long-term bet rests on 3 pillars: energy independence, technological leadership, and smarter trade deals that put American workers first. These aren't just campaign themes, they're structural bets on where American competitiveness lives in the next decade. Economists note that maintaining momentum will require continued attention to infrastructure and workforce development. The rise in millionaires is an encouraging signal, but the goal was never more millionaires for their own sake. The goal is a more dynamic, more competitive, more opportunity-rich America. The foundation is being laid. The question now is whether the momentum holds and whether both parties have the discipline to build on what's working. More millionaires, more jobs, more entrepreneurs. The data tells the story of a policy environment designed to unleash economic potential, not manage it from above. Whether you focus on wealth creation, job growth, or inclusive opportunity, one thing is clear: policy choices have consequences, and these ones are showing up in the numbers. What do you think drives lasting prosperity? Tax incentives, deregulation, or workforce investment? Tell us in the comments. Subscribe to Critical Point and hit the bell for data-driven analysis that cuts through the noise. Thanks for watching.